Hello again, welcome back to MasterChartsTrading.com. This is a recap for Friday, March 4th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. We have quite an eventful week. We'll look at S&P 500. Didn't really do much, kind of stayed in the same place. NASDAQ fell below vital support. We'll look at that. Dow Jones, small caps, all are approaching 52-week lows, and European stocks completely collapsed. We'll look at that. I'll look at also market breadth, which is deteriorating. Possible downside target for S&P 500 is 3,500, so that's really bad. And we'll look at junk that is also approaching 52-week lows. It closed at 52-week lows. Treasuries did rally a bit. I think all of this taken together is showing an increased fear. Commodities also rallied, and the dollar did also rally, so that's quite an unusual. I'll show you a couple of very nice trades we did here at MasterCharts Trading. Goldfields and Occidental Petroleum, and Bitcoin could easily collapse. If you're a subscriber, we'll look at all of these various stocks and commodities. Lots of gold and gold miners also. You can see there's Harmony Gold with precious metals, Silvercrest, and Newmont. So stay tuned if you are a subscriber. If you are not a subscriber, consider signing up by going to MasterChartsTrading.com. Click on products, sign up for one of the products. I have trading indicators, which I will explain in a second, and I have a newsletter where you will get all of these alerts that I just described. So let's go right to it. S&P 500. This is a daily time frame. So again, I'm normally trade on daily time frame. You can see you can change the time frame to whatever you want. But for humans, much easier to trade on daily charts, meaning that each one of these candlesticks is 1 day's worth of activity. So if you're trading on daily charts, then you need to set your length or of my MasterCharts Trading price action indicators at 250. If you're going to weekly charts, notice it says W here. So 1 week, each of these candlesticks is 1 week worth of activity. Set your indicators to 52. If you want to trade on monthly charts, in other words, you only trade on the last day of the month, it's unusual but not impossible. You need to set your length as 12. If you're trading on something like, 5-minute chart, then leave your length as 250. But make sure you're trading a continuous instrument. In other words, for example, futures, and do not trade a stock. See how there is a gap? Yeah, don't trade using my indicators on intraday. You can trade it on daily chart, but if you want to trade intraday, make sure it's a continuous instrument, like for example Forex or Bitcoin. All right, so how does this work? So we're looking at S&P 500 here. So basically what we do is we look for a stock when it closes above the blue support resistance line, we buy it, and then once it moves above our target, we advance our stop to entry and continue holding it. Currently we're looking at S&P 500 as it is retesting support. So this red line is a support line. It's really kind of indecisive here on S&P 500. Last week on 24th of February, we saw a spike through it, but the support held for now. Not really great action here, just nothing really happened. It's sort of traded sideways, up and down, lots of volatility though. And notice also that the support actually moved higher. So whereas last week it was like 41.20, currently it's at 42.05. I'm reading it right off the chart. To do that, you need to see how it says. Let me see. Labels. See, it says labels. You can see symbol last value and indicator last value labels. So not really much, except for let's watch this level at 42.05 for S&P 500 and see if it is breached. Alternative scenario is also possible. You know, if we close above 44.46, I'm looking at it right now, blue line, then we could make a new record. It's not out of the question. It's just that S&P is more resilient than other indices. Let me show you, for example, NASDAQ. So here's NASDAQ QQQ. You can see it's already significantly lower, you know, below the red line, whereas S&P is still above it. NASDAQ is already below the support. So and today actually really kind of not great action. You can see we gapped down and then we stayed down there. So caution for sure. Looking on, this is a daily chart. Let's look on weekly chart. Weekly chart actually looks worse. So this is a, you can see right now we closed below this red support resistance line for NASDAQ for the first time since, this is a weekly chart. Each stick is 1 week's worth of activity. So first time since April of 2020. So this is like around the pandemic time, the lockdowns in the United States here. You can see it was below here actually in March, I'm sorry, right there in March of 2020. So this is not a good news. Additionally, we're super close to just outright bearish levels. Bearish levels for QQQ for NASDAQ is a 317. And you know, I can look at the actual index NDX. So it's 13037 currently. That's the bear market. Actually, it used to be 1297. It moved up a little bit. So not great. Not a great action. You know, we will be monitoring this, but see how I said this is to my subscribers: caution, 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 3 times already. So be very cautious, especially with this high beta technology stocks. Dow Jones also caution, also gapped down today. Look how it gapped below this red support resistance line. Also notice how the lines moved up. So this is making it easier for bears. You know, bulls. You need to, the price needs to rally further. Whereas just last week it needed to rally, you know, to here, to 345 for Dow Jones DIA. It now needs to rally significantly higher. So, you know, let's watch it basically. And we're so close to bear market. And, you know, once we get there, I would just avoid buying stocks. Now, it does not apply to gold stocks and precious metal stocks. And apparently it doesn't really apply to oil related currently, because oil related stocks are doing quite well, and so are gold related. But you know, on average, you know, just various stocks could come under severe pressure if we break below these yellow lines. Small caps IWM, you know, this guy is already broke down. Notice that the bear market for small caps actually started here in January, 18th of January. At that point, I sent an avoid alert. Notice right there, avoid. If you're sophisticated and savvy, you could have bought puts right there on 10th of February or outright shorted it. You would have been already in the profit. And probably I'll just keep holding this short. Now, you know, again, we are not in great shape. Notice in this weekly chart of small caps IWM, we're so close to new lows. We can make new lows very easily. Yeah, so this is not great at all. And of course, European equities. This is Europe, Europe 50. You know, major companies of Europe. Unequivocal bear. You know, we collapsed basically. So notice here we are below this yellow support resistance line. We might bounce but it would be a bounce to consider a opening a short. So taken all together, this is not a good news at all. Let's look at market breadths quickly. So this is advanced decline volume line. Again, I already explained it many times. You can look up, go to Chart School and look up, this is on StockCharts.com. I use that as well. So you can look at advanced decline line and you can read how it is constructed. Now, so this advanced decline line is showing us that, notice what we broke below, this line is really under pressure. Notice we're at the same levels as we were back in November of 2020. So extrapolating this thinking, not exactly exact science, obviously. If we extrapolate this thinking, if the advanced decline line broke below, significantly, and S&P 500 hasn't yet done so, the possible downside target is where the advanced decline line was previously. Again, this is extrapolation, this is a conjecture, but 3,500, for S&P 500 is disastrous. So let me show you where that's gonna be. 3,500 for S&P 500 would be right there, and that's around November 2020 levels, where it broke out here and just continued higher. So a bear market for S&P is at 39.65. So if we break below that, that's already a bear market, but downside target could be 3,500. So that is very significant, actually. So let's watch where that takes us. But what I'm seeing is not very encouraging. Additionally, junk debt. So we're looking at junk debt right now, as I keep mentioning. Junk debt correlates highly with S&P 500. What does that correlation mean? Let me show you on monthly charts. So monthly charts of S&P 500, generally speaking, do the same thing as S&P. Occasionally they go into negative territory. In other words, they are not correlated. But by and large, I want to think about junk debt as an extension of a stock market. Excuse me. So looking at this is 52-week low. We closed today at 52-week low. It's not the 52-week low because the 52-week low was set here on 24th of February. And I thought, wow, this gotta be something like a bullish engulfing. But not so fast, I guess, right? So not a great sign once again. Because of correlations, I'm thinking that junk debt seems to be leading the stock market lower. So the breakdown for junk debt started in January. S&P 500 hasn't even touched the yellow line yet. You see, we're still way above it. So if the history is correct and junk debt is leading indicator, then breaking down to new lows is not a good sign for stocks. So I don't have any stocks personally right now. I have one. I have Newmont Mining. That's the only one I have right now. And actually, if you're a subscriber, I will cover it right there, Newmont Mining. So not a great sign. Once again, let's watch what happens. But this Ukrainian horror is not obviously not great for stocks. So let's watch where we get from here. Treasuries. So last alert right there on February 3rd was very successful. You should have been out of your trade right there on the 1st of March. You should have taken profits and you closed your position right there on 1st of March. I haven't yet sent a new alert, and probably a good thing, because notice this, very strong push lower, but just as strong rallied today on Friday. So this is fear. Usually treasuries are bought during the times of financial stress or just stress and fear, and especially. So right now we're looking at increasing fear in the stock markets, and treasuries are bought during those times, despite the fact that Federal Reserve seems to want to increase the interest rate, but now they're going to have a very difficult time doing that because of the way things are unfolding. And if stocks go lower, they may end up having to buy ETFs. The Federal Reserve might start buying ETFs of the NASDAQ, S&P 500. They already bought JNK, junk debt, during the pandemic, so it would make sense for them to start buying stocks at a certain point in the future. It hasn't yet arrived, and they're still playing, with the idea that they're gonna increase the interest rates, etc. But I think with the new developments, and it's going to be very difficult for them to raise the interest rates. But we will see. Okay, looking at dollar, we're basically looking at commodities now. Looking at dollar DXY, so pretty straightforward. You can see how my indicators are just obvious, and you can use them yourself. This is a weekly chart, so each candlestick is 1 week's worth of activity. This is the inflection point right there, 19th of July 2021. This is a week of that, 19th of July 2021. And then at that point you just buy and basically hold it. Now dollar normally moves opposite with gold, so let's look at gold, because it's XAU divided by US dollar. So if dollar goes up, shouldn't gold go down? Not always, right? So you can see that what's happening here is we have both dollar and gold going higher. Why is this happening? Well, because euro is collapsing mostly, but also because there is a lot of fear, and fear drives prices of gold higher. We are long gold. I am long Newmont mining, for example. Today, this is a weekly chart, so we can look at the daily chart as well. Gold, I thought last week this was a shooting star candlestick, 24th of February. I mean, it could still provide resistance, but just the way things are going, it doesn't look like it's gonna stop here. This is a monthly chart of gold, so all-time record high is right there, months in August of 2020. The high was 2075, so we're at 1970. We could easily break out and continue higher. So fear, yeah, this is fear. Looking at this monthly chart, notice this breakout above. I can kind of draw a line. I don't normally do that, but let's draw a line here. So there's the line, there's the breakout on the month of June 2019. We can do a measured move. So let's say a measured move is, again, pure price, pure conjecture. If this is, I'm gonna kind of do that. So if this is a 50% move, what's it gonna be on the upside? Okay, so something like that, before anything remotely, before it stops. So we're looking at 2600 for gold easily, if we break above the August 2020 highs. Not necessarily immediately, but it could easily get there. This is a measured move kind of technique, and you can argue where to draw the lines and all that, but that's just like a normal kind of ballpark figure. we're long gold already, so if it goes to 2600, that's wonderful for our positions. It's probably going to be pretty nasty for the world because this type of fear is usually precipitated by some really bad events. So we're already witnessing some pretty bad events in Europe with war not anywhere near its end. I thought it was going to be just quickly some sort of a quick resolution, but no quick resolution to this war yet, and I'm hearing that it's just not looking good right now. Anyways, back to the technical analysis, and I wanted to show you one trade that we actually did. This is Gold Fields. So Gold Fields GFI. This is obviously a gold miner. So I was already, interested in gold miners and gold fields in particular. Look at this. This is a breakout right there, 15th of November. Okay, this is not an alert, but this is where the breakout occurred. And see how obvious it is. You don't have to think. See, people think too much when they trade. This is no thinking. You just buy it right there. Two alerts, one here on 12th of January, second one 8th of February. Obviously, you want to hold it here. You don't want to be just selling it. And that's a 46% move. Congratulations. I don't know anything about this company, all right? The only thing I know is that it's a gold related. So that's the only thing that I know about this company. And the only thing that I'm using, notice, is my indicators. And this is just pure price action. You don't need to know anything about anything to trade. Except for, in this case, that it's a gold related stock. Oil, of course, today I live in California here, I filled up my tank of gas for $4.33 last week. Today in the morning it was $5.09. Today in the afternoon it was $5.19 already in the same gas station I go to. So you can see that things are moving crazy rapidly. Didn't trade this. If you were a subscriber and if you have my indicators, then pretty obvious this is where you buy. This is, we got a stock that came down and you buy it on close above the blue line. So yes, you could have easily made good money here. That's a 62% move. If you're using futures, that's a home run basically. Will it continue? I thought this was the shooting star candlestick. Clearly it's not really doing anything. Oil just keeps going higher, and now I hear Russian oil will be banned in the United States, so most likely this will continue even higher. One oil-related company we did trade is Occidental Petroleum, this United States company. Again, I didn't really think much about it at the time. This is an actual alert right there, 22nd of December of last year. I didn't really, how would I know? How can I predict the future? I can't. So we diversify, we look for many stocks and we buy various stocks, and you can pick and choose which ones you want. But occasionally you get those home run trades. This is almost 100% move from the alert. It was at 28 or so, now it's 56. How did I know? I didn't, but it's pretty obvious on the chart, right? If it's not obvious to you, let me know and we can argue possibly. But this is how we trade. Again, we just look for a stock that comes down towards the blue line, or in case, for example, gold miners, when it breaks out above the blue line. But the blue line is the important one in this case. It's a bullish trend setter, basically. And finally, coming to an end of the presentation, here's Bitcoin. I think it's a bearish security. Another recent alert right there. Notice we have 3 alerts recently, and they're all successful so far. previous two alerts were very successful. They are easily, 20% plus moves in our favor. This one already, basically you can move the stop to entry at this point. And see how the stop is right now at the blue line? Or you can just do that and then, or at your entry. This way you can't lose, you see. That's how my system works. Once your target is reached, you move your stop to entry. Alright, so that's it for this week's recap. Head over to MasterChartsTrading.com, click on products again, sign up for one of my products. I have trading indicators, newsletters, and ultimate bundle, which includes both. So trading indicators, as I just said, are these lines. You can apply them to your free TradingView account. TradingView.com account is free. You just need to apply my lines. And the lines are not free. You gotta sign up for them at $30. It's a steal because you can buy, sell, trade pretty much anything under the sun. Here's wheat. I don't know. I don't trade it, but people freak out about it, obviously, because people like to eat wheat. Okay, I don't know anything about wheat, but I know that this is a good place. This was a good places to buy, and they're pretty darn obvious. You see how easy it is? And that is 47% gain if you're smart. Okay, so that's the indicators. If you want my newsletter, and you get also various stocks that I cover. So again, these are the stocks I'm gonna cover this week in the members only section. So stay tuned if you're a member. And again, if you want to just get both of them at $60, that's a steal, and you will get the entire package and you will know exactly what to do. Alright, that's it for this week's recap. Let me know if you have any questions. Thanks for watching and have another great trading week. Bye bye.